Alright, for this video I wanted to cover Form 5695, which is the residential energy tax credit, and specifically we want to look at the small wind energy tax credit for the 2022 tax year. So I've got a slide in front of us that's going to cover some of the background information on the credit and the fact pattern that we'll be working with. And then I do have the sample 5695 with the 1040 for our taxpayer here, John Q. Taxpayer. And again, this is for the 2022 tax year. Now, the reason why I want to focus on the 2022 tax year is because the Inflation Reduction Act, the IRA, extended a lot of these credits that were otherwise going to expire. And so it extended them for at least the next decade or so. But a lot of the provisions that applied previously only apply to 2022, and then there's kind of a new set of rules that applies going forward from 2023 and onward. So what we have with us now is, well, the 2022 rules basically mirror what we saw in previous tax years, and then they change from 2023 going forward. So just a bit of background on the credit, right? It is a residential energy tax credit, and so when we look at the 5695, it's in two components. So we have Part 1 and Part 2. Part 1 are those residential clean energy credits. That's what we're going to be focusing on today. And then we also have in Part 2 energy efficient home improvements. So within the clean energy credit, there are a variety of different types of credits, right? There's solar electric property, solar water, fuel cells, battery storage, and then this one we want to look at is small wind energy tax credits. So specifically, we can find this guidance in that's Internal Revenue Code, IRC Section 25 Cap D, A4, and D4. And so within these sections, it defines the qualified small wind energy property expenditures as expenditures for property which use a wind turbine to generate energy, right? And so this has to be used in connection with a dwelling unit. So it's a residence, right, where somebody lives. It's not a commercial property. So it's a dwelling unit inside the U.S., and it is used by a residence as a residence by the taxpayer that's claiming the credit. Now, this credit isn't restricted to just your personal residence, right? So if you have a principal residence, which is your main home, but you also have a second home that's, let's say, a vacation property, you can install the small wind turbine and claim the credit on that second property, right? It just has to be a residence. It doesn't have to be your main residence. All right. Now, what about some other ancillary costs here, right? So labor costs, right? Similar to the other credits, labor costs under 25D E1, you can include these costs as part of your basically base to compute the credit, right? So the labor to install the wind turbine, that'll count towards the credit. What is the credit amount for these small wind energy tax credits? Well, it depends on the year you place it into service, right, and spend the money. So for 2022, the year we're working with here, you get a 30% credit, right? So 2022 through 2032, so for the next 10 years, it's a 30% credit on the amount. And previously, it was 26%. So last year and the year prior, 26%. And then it goes back to 26% in 2033. So this is 10 years out, but the credit does remain at 30% through 2032, then reverse to 26% for 2033, and then for 2034, it's 22. Now, from 2035 and on, so far, you won't get any tax credits. Now, realistically, I think that there will be legislation passed to extend it, but for now, the laws on the books say we have until 2034 to put these property improvements into place, and we can get a tax credit. Beyond that, you might not. So what about the example fact pattern we're going to look at here? So we have John Taxpayer, and in 2022, he set up he had a professionally installed grid-connected small wind energy electric system, right? So it's he's got a wind turbine. They paid for the inverter, all of those components needed to get connected back into the grid. So, he's using one of those systems where he's basically supplementing his energy usage for whatever the wind turbine produces. Now, The entire cost of the system was $3,650, so that's going to be his base to compute the credit. Now, in the prior year, in 2021, let's say that John claimed a clean energy credit for something else, let's say solar panels, and the credit that he had last year was $4,900, but his tax liability was $4,095. So all these clean energy credits are non-refundable credits. So last year, because the credit exceeded his tax liability by $805, he had a credit roll forward of $805. So the $805 that he couldn't use last year is being carried forward to this year, and it's being included with this $56.95 for this period. So let's go ahead and look at the tax return and cover some of the main parts here. So we have the $56.95. The qualified small wind energy property costs are reported there on line 3. So those were his costs for the current period, right? That's everything all in to install the turbine and get it hooked up to his system. The credit is 30% of that amount, so $1,095. And then this is the unique element for John's situation, right? He has a credit carry forward from the prior year. So in 2021, he had a carry forward of $805. That was reported on line 16 of his Form 5695 from last year. So he's got $805 left over. So when he computes his overall credit for the current period, he can combine the current year credit, so $1,095 plus the $805 carryover. So he's got $1,900 working with this year. Now, again, the limitation based on tax liability. These clean energy credits are non-refundable. That means the credit can be a dollar for dollar offset against your total taxes. But if it goes over that amount, you don't actually get a check from the government, right? They don't cut you a check if you get a credit in excess of your taxes owed. So if we look at John's 1040, let me scroll up to page 1 and 2. So here's his income, right? So $45,000 in wages, some investment income. His total tax based on his taxable income is $3,290, right? So that's the amount the credit can go up to before it becomes non-refundable and has to be rolled forward. So the $3,290 is what's reported as the credit limit here on line 14. So because John's credit of $1,900 is lower than the tax liability, he gets to use the full credit. So basically $3,290 minus a $1,900 credit. The difference is the tax remaining that he owes to the IRS. And so we can see that up here on lines 16 through 24. So he's got a total taxes there, $3,290. The amount of residential energy credit coming through from Schedule 3 is $1,900. So it reduces his total tax owed to $1,390. And so that makes his refund go up, certainly. But remember, these residential energy credits are non-refundable. So if you're a taxpayer and you have very little taxes owed every year, or maybe no tax owed, if you claim these credits, it might not provide any immediate tax benefit for you, right? You might be in a position where you complete the $56.95, but basically all of the credit is just being rolled forward here on line 16. I've seen that happens a lot of times because taxpayers will go pay for all these improvements, and then the salesperson will tell them, oh yeah, you're going to get money back from the IRS. And it's not entirely accurate, right? It is just a dollar for dollar offset against your tax, non-refundable credit. So if you don't have any taxes owed, you're not going to get anything back from the IRS. So you think of the tax credits a lot differently than an actual rebate, right? There are rebate programs where you actually get a check back, but in this case, no. It's just a credit against your taxes owed for the tax year. All right, so that covers it for this video. Hope that was helpful. If you have any questions, feel free to leave me a comment below. And of course, I always look forward to seeing you all on the next videos. Thanks.